So you have heard of it before. Buying a great stock at the wrong price could still be a bad investment. And the trick is to buy only when it's undervalued. And the first step is to first figure out what is the company's intrinsic value. So this is stock number 3 in our 7-day series, showing you how to start investing in companies around you with StockOracle. And the company we're talking about today is the world's largest online salvage car auction house, Copart. If you're based in the United States and have seen the wrecked car after an accident before, there's a good chance it ends up on Copart's auction platform. So Copart connects insurance companies with buyers like repair shops, exporters, and dismantlers across a global network. And their online model means faster sales, higher bids, and no need for physical auctions. Over decades, Copart has built a powerful network which allows them to enjoy industry-leading margins and a business that has expanded well beyond US borders. And using StockOracle, it helps you gain a deeper understanding in minutes. So let's look at Copart together in StockOracle. Let's first key in the ticker symbol, CPRT, and you are being greeted by the dashboard. So at first glance, when looking at the Oracle IQ, things look pretty decent, although it's not everything at the green zone, which is the highest quality companies. But I think there are a few yellow flags here on profitability and growth. But generally speaking, I think still a pretty decent and strong company. When looking at the valuations, comparing to the Oracle value versus the current market price, there seems to suggest that there is some sort of a margin of safety. But by looking at any company, let's always first look at their financials, how they're performing, how they're growing their business. In terms of top line revenue, operating income, net income, I think all growing in a very healthy direction. Same thing for bottom line free cash flow, just growing very nicely 45 degrees to the right. And just comparing the difference between their cash and their total debt, I think this is a very, very healthy company and not afraid of going bankrupt anytime soon. Now, if we were to move on to some of these profitability ratios, I'm looking at margins, looking at the return on equity, they held kind of steady. So they're not necessarily in that very new growth phase where they can still expand their margins. Looks to me like pretty matured where margins are staying in that specific band. But in terms of the profitability and the efficiency in trying to deploy new capital, we do see that they are experiencing some sort of a slight decline compared to 5 years ago. So that might potentially be something that we want to keep in mind when doing our analysis later on. Moving on to the mode, we can see that at first glance, Copart seems to have a white mode here, but just hopping over to the Oracle IQ tab and see the AI mode analysis, comparing it through the 5 criteria, we do see that they have an overall score of roughly 8. So they're not necessarily known for their quote-unquote brand loyalty or pricing power, but we do see them scoring very high on a few of the other criteria, like high barriers to entry, especially when it's reinforced by their vast network of 200 physical yards. And these yards itself, it's basically the crown jewel of Copart's business that enables them to kind of block out any potential competitor. And it also serves as some sort of a duopoly in the salvage car market in the US today. And of course, not forgetting the two-sided strong network effects of having more sellers and more buyers bidding up the best price. So after looking at the company's overview, its key financial metrics, its mode, I think a lot of investors are very concerned about the intrinsic value and what is a good price to pay for this business. So specifically for StockOracle, you can see that when you go into the intrinsic value chart, we are given the distribution of different outcomes through the different ways of how you can tabulate popular methods to value a business. You have DCF, you have DFCF, discounted net income, comparing it to price to sales, price to book, so on and so forth. And of course, we have our own in-house Oracle value estimation as well, which puts Copart's intrinsic value to be roughly $57 per share. And I already foresee this question. Some of you might not like the auto calculations from the system itself, and you wish to stress test some of the different assumptions. So simply put, you can basically scroll down all the way to the bottom, choose the ideal method, and on the left-hand side, it comes with the default. But on the right-hand side, however, they basically auto-populate all the assumptions and the current cash and short-term investment, the discount rate, and the shares outstanding. And all you have to do is to basically tweak some of these numbers based on what you're comfortable with. Assuming that you think that the growth rates for the first 5 years of Copart for their operating cash flow is 10%, it's too conservative, you want to bump it up to 12%, and automatically it will be calculated on what is the expected intrinsic value based on your own assumptions and calculations. And I know that some of you might be thinking, so what is the correct number to put in? I think specifically in investing, it's really an art and a science. There is no quote-unquote perfect or correct answer, but I do believe that history do serve as some sort of a guide, and all you have to do is to go under the company matrix column, just scroll all the way to the bottom, and it actually gives you a buffet of different benchmarks in terms of their historical growth rates. And just looking at some of the important things we need in terms of our assumption and our discount model, I'm looking at operating income. I think the last 1 year, they have actually slowed down significantly. But if we were to stretch out the timeline, last 3 years, they were growing at 11.4%, 5 years at 17, and 10 years at 17.66%. You want to take into account the share dilution or potentially any share buybacks, you can look at operating income per share. And it tells a similar story of growing between 11, 12 to even 18% on the high side. So yes, I think in the short term at least, we are experiencing some sort of a slowdown in growth. And if we actually take a longer term view and expect growth to actually re-accelerate, even looking at consensus estimates from analysts today, the projected revenue growth rate is roughly 7 to 8%, and the 3-5 year EPS growth rate is closer to 10%. I think you can always go back to the intrinsic value tab to kind of play around with the different assumptions and expectations, especially this idea called a reverse discounted cash flow. You want to see what the market is essentially trying to price in. So assuming that Copart is today trading at $49, I'm going down to that own calculation tab. I want to nerf the growth rate to get back to my so-called the current existing price. So in a way, you can also flip the script and to understand that, oh, this is basically what the market is trying to price in today. So I hope that through this very short walkthrough, you'll have a better appreciation and understanding of how to calculate intrinsic value on your own with the StockOracle platform itself. Now, let's talk about why figuring out intrinsic value matters so much. So intrinsic value, or IV for short, is simply what a business is worth based on the cash it can generate in the future brought back to today's terms. So the stock market throws around prices every second, but the true value of the business changes much more slowly. And the reason why calculating intrinsic value is so important, if you buy well above the IV, your future returns get squeezed even if the company performs well. Instead, if you buy well below the intrinsic value, you give yourself a built-in margin of safety. It gives you more room for upside, less risk as well if things don't go as perfectly as expected. So in the past, figuring this out usually meant building your own spreadsheet, projecting earnings, discounting cash flows, and tweaking assumptions as and when you go until you got to a number. Useful, but time-consuming, and easy to get wrong if your inputs are off. Today, you can do it with a few clicks on StockOracle. That's it, focusing on intrinsic value is smart, but it's not the whole picture. A stock can be cheap for a reason, and buying a lousy business at a bargain price usually ends the same way, badly. So without strong fundamentals, that discount, usually below IV, could quickly turn into a value trap. And the real edge actually comes from putting it all together. The quality of the business, the strength of its moat, the financial health, and yes, whether you're paying the right price. So intrinsic value is something that tells you what the company is worth today, but the company's ability to grow and protect that value is what drives returns over the long run. And you will have that overview in StockOracle via Oracle IQ. At the end of the day, understanding intrinsic value gives you a compass. It keeps you grounded when markets swing high and low and helps you avoid overpaying. The goal is to find great businesses, own them at prices that leave room for growth, while also protecting your downside. And if you want to get access to this investing tool, you can head down to the link below to check out our latest offer. And this is CK from Piranha Profit signing off. Till next time, keep winning.